It's unbelievable. There's always Honing's been the lone dissenter from day one, and now you're hearing whispers. Some traders on the floor are thinking that the Fed is just prodding to see if we can accept a rate hike. But the fact of the matter is, QE2 will last until June. That's my conviction. Our inflation readings are very low still. Our jobs picture is not what it needs to be. They're expecting, what, 222,000 on Friday. Unless that jobs picture gets better, there's no reason for the Fed to stop early. So with that in mind, there's going to be dissenters. Honing's been dissenting from day one. There's been whispers all around the street about raising rates and what that's going to do to the market. And I think they're just trying to feel us out. But the fact of the matter is, it's going to stay in place until its fruition in June.
Larry, we're also hearing from Phil Flynn in Chicago this morning about the kind of economic environment in which Obama has talked about energy today and tried to lay the groundwork for reducing imports, etc. But on that issue of oil prices and energy, is that at all being factored into the Fed's assessment of the recovery?
You know, the oil prices right now are just really just factoring in the slowdown in Japan, the fact that production is going to slow down. We're bumping up around $104 a barrel, at least with West Texas Intermediate. That seems to be the new $90 a barrel. No one seems to care about it anymore. And what Obama said today was something that we've all heard before. He wants to become a more pro-drilling president. Let's see that really happen. You know, Australians, by and large, are very practical people. Americans aren't, by and rule. We don't see things the same way, and the fact that it's pretty simple. We just need to drill our own oil and make it available. We have tons of oil here in America, and Obama's talking about let's let the reserves go, let's drill more, let's be more efficient. These are things we've heard for years and years and years. Let's get moving because we're just too dependent on other countries. So all that to say, $104 a barrel seems to be the new $90 a barrel, and everybody seems to be used to it right now. The markets aren't factoring anything right now.
So in terms of where the markets are trying to look, we have chatted with people about non-farm payroll numbers out towards the end of the week. But even beyond that, the coming weeks, I know that you've mentioned to us, look, you go into this kind of quiet period for 2 weeks because we head towards the earnings season. Does that mean there's going to be kind of a vacuum of information, or are there economic indicators or hooks that people can be having a look at in the meantime?
It seems right now, you're right, that April 11th is the start of the Q1 earnings season. And from now till then, the volumes in the market have been really light, and the market seems to want to climb a wall of worry. You have the problems in Greece and Portugal, China, Japan. You have our own debt crisis and our government shutdown. But it does seem like the markets do want to rally, even on light volume. Although I have to say, institutional desks are seeing a lot more flow in ETFs, a lot less flow in single stocks. That really doesn't mean anything other than the fact that it's a professional game right now, and the markets are climbing up. They're marching up very slowly.
Can I ask you also about the Australian dollar, Larry, because we're just marvelling at the kind of run that we've seen for our local currency. And we've had a bit of chatter here about the idea that maybe the Australian dollar is even taking on kind of a safe haven status, if you like. Does that idea gel with you guys there? What are you hearing about the Australian dollar, and what are you guys chatting about?
Well, as a veteran trader of the Australian dollar, I love to hear that word, that it's now a safe haven, because it truly is. I mean, all the talk, I mean, I know Aussies probably don't see that, but it truly is right now, because all the talk is commodities and inflation. And Australia is the benefit of both. And not to mention the outlook for China. And your numbers, believe it or not, are much better than the world's. Retail sale numbers came in very well. Your home building numbers have come in well. As long as your you know, China and the commodities continue to rise, the Australian dollar will stay where it is. I mean, who would have ever guessed? We're at a 29-year high in the Australian dollar. The only thing that I can see to make that go down is if the U.S. dollar, if the U.S. Fed does raise interest rates, which would close the differential, people would take profits. But right now, hey, why not buy the Australian dollar? They seem to have their act together. Nobody else does.